Let's welcome in Chris Grisanti. He's the chief equity strategist at MAI Capital Management. So, Chris, like Rick and many others, you're not necessarily, your hair's not on fire over the twos, tens inversion that we are about to see.
No, I'm kind of tired of hearing about the yield curves, and it kind of reminds me of the word transitory last year. This year it's yield curves. So we look at the 3-month, 10-year. It's still, as you pointed out, Kelly, still steeply sloped. So we don't see a recession in the cards, certainly not this year.
And what makes you so bullish on stocks? Because there are still plenty of headwinds to contend with.
Sure. Well, I like to do this kind of mental exercise. Let's say you went on vacation 3 months ago and just came back, and you found out that the 10-year had gone up 100 basis points in its fastest rise in history to start a year, that Russia invaded Ukraine, and that oil had spiked up 45%. You'd probably be somewhat surprised that the S&P is only down, about 4%. And so I think the market has actually shown a lot of resiliency in an otherwise really turbulent time. We don't see another 100 basis points on the 10-year. So we think going forward, things will actually be a little better than they were for the first quarter. And we think it's a great time to buy stocks.
You like stocks like Google and Amazon. I think people can understand that cash flow.
Sure.
Show me the money, to quote Jerry Maguire. I'll borrow your phrasing. You also like Domino's and Home Depot. Do you have any insight as to why some of these pandemic names are suddenly kind of regaining their traction? Why are the meme stocks flying again? And why do these names to you look attractive here?
Sure. So you really have to separate the baby from the bathwater when you're talking about what I call COVID hangover stocks. And there'd be Home Depot and Domino's in one hand, where they just had such terrific growth a year and a half ago, and now they're finding it tough to compare against those periods. But these are terrific long-term companies. So that's the baby. And the bathwater may be some of these meme stocks, some of the other kind of what I would call flash in the pan pandemic stocks. But for the pandemic, they really wouldn't have been great companies. So we really like Home Depot and Domino's. They're trading below their average valuation in a market that's trading considerably above its average valuation. And they're long-term terrific companies. They buy back stock. And like you said, it's a Jerry Maguire market. Show me the money. And these guys can show you the cash flow. So we're excited about it.
Final word, Chris. What do you say to those who say, but consumer sentiment, but the Fed's going to screw it up? They're behind the curve. That they're just worried about recession lurking around the corner, even if it's in 2023.
Sure. So we're going to climb a wall of worry, and that you mentioned a lot of them. And but boy, in a month we'll be in the middle of earnings season. I think it'll be an impressive earnings season, especially, and this is really vital, Kelly, that sentiment is and expectations are so low. So I would take advantage of that. I'd pick your bets for the long term and make them here.
All right, Chris Grisanti, great to have you today. Thank you for your time.